Well, thanks for tuning into this broadcast. It's an interesting time because President Donald Trump has had a press conference wherein, well, he's declared victory for the Republican Party and himself, but he's also mentioned things like he's going to the Supreme Court for voting timing extensions, which shouldn't be done, what have you. Now, we don't understand US politics as well, but we understand the impact that such statements can have on the markets. I think the markets have come off a little bit from where they were trading. And it's too close an election to call right now. Ajay Srivastava of Dimensions Corporate Finance, who's seen multiple such instances and the impact on the markets thereof, joins us right now to give us his assessment. Ajay, so good having you. Thanks for joining in.
Thank you very much.
Now, I hope all is safe, Ajay. But what do you make of this humdinger of election as it is going down right now, and what do equity markets take from it?
I think two clear things are happening here. One, of course, is, I'm sorry to say this, that the world media has a lot to answer for, because what is supposed to be a landslide for Joe Biden has become the tightest finish possible, tighter than what Hillary Clinton's election was lost. So I think the media has a lot to answer because they change the narrative in a particular direction and say, oh, the world is voting in one way and that's how the world is. No, the world is different. This is the real world which votes differently with the different people. So I think this is one great lesson for everybody, that the media needs to be more responsible, convey what the people are saying rather than have their own narrative. And this has proven it abundantly. Now, whoever wins or loses, it has great implications from India perspective. US, as I said, households are divided in India itself. It's the most watched US election ever. Nobody cares a damn about Bihar, but people care a damn about Senate seats and so on and so forth. But I think, the combination that protracted elections, Senate, which might get into kind of being equal, and then you have a stalemate there, that could be bad news for the US market because the stimulus package will not come through. Because the US market is banking upon that whoever wins brings a big $3 trillion stimulus package. And therefore, the whole equity market is sitting on that. If that doesn't come, you will feel implications of that. The second is more important for us is that who wins is what's going to happen with China. Because let's be honest, between Obama-Biden 8 years, China became a global superpower in those 8 years. Unchecked, unbridled. At least last 4 years, India has benefited from it. So strategically, India might find a weaker position vis-a-vis China if Biden wins, with implication on our border and our market. That's a negative. The positive side is if Biden wins, oil prices are going to crash more because he's going to get Iran back in the world market. So at $36 oil, it might become $20 an oil or $10 an oil. So we have a strategic issue on the border in case Biden wins, but we have a windfall on oil in case he wins. Of course, as I said, if Trump wins, equity markets will heave a sigh of relief, and I think we will have a good quality party and rally for the next 3 years. So all bets are off at today at least, but I think if there is a victory coming for Trump, great for the equity market. If there is a loss coming, great for all the industries which use oil.
If India, again, I don't know what you make of. I don't understand how the US politics and the US court system would work and etc. But if Donald Trump has invoked the mention of how we will go to court for whatever reason it may be, and that's brought about a bit of a nervousness in the markets, how important a factor could that be in the near term? Whether he goes to court for this reason, or if it's a closely fought eventual verdict or close verdict with Donald Trump trailing, in which case he probably most certainly will go to courts. How big a problem in the near term could that be?
It could be a big problem, because as I said, everybody's views are on the last stimulus package which got stuck in the Senate. Now, that's why I said it's not only presidential elections, it's also the Senate is becoming important because they need to pass the stimulus package. Because if the stalemate in the Senate or the Republicans win the Senate, then the stimulus package is going to be much smaller than what the Democrats want to bring in with all their favorite schemes, etc. So it's going to have serious implications. And, any kind of uncertainty of this kind, who's going to rule the country for 4 years, means all policy initiatives are gone, particularly stimulus package. So it's going to be nervous markets. I think when they open up today, US is going to be nervous markets. People might be hoping that at the end of the year, night, there'll be clarity if they go to Supreme Court or the voting. But I think it's so bizarre that the technologically most advanced nation of the world can't just count the votes, can't ensure that people don't double vote, because that's what is happening there in US as we're talking to our friends there. It's so bizarre as a concept that, they can't declare an election and being the most advanced technology country in the world. So I think, but for markets, nervousness ahead if this stalemate goes to court.
The other factor is, Ajay, what happens to markets if indeed, as you said, you described that if indeed it's Donald Trump victory, then equity markets would have a party. If it's Joe Biden, let's assume, and you spoke about oil, which is one thing, but if indeed it's indeed a Democrat win and a Joe Biden victory, with an assumption that there is no big change in House and the Senate, so to say, do you reckon that a higher stimulus package that comes in from the Fed, which of course has shown its hand, would be a bit of a soothing move for the equity markets?
Oh, it will be. And not only will be a soothing move, I think it will be a great opportunity for people to offload the stocks that they carry on their portfolios. Everybody's overweight US stocks, including Indians are overweight US stocks at this point of time. So, so this stimulus package will give a great opportunity for people to even offload some of the stuff they carry, because they need to go light after that. For the first bust of the stimulus rally, you get out, lighten your positions. Because the whole agenda of the Democratic Party, that doesn't gel well with a strong equity rally. And as I said, a resurgent China, oil prices falling, and to that extent, and then you have a problem in terms of taxation coming into place, then all this other social agendas come into place. That takes you closer and closer to the model of rest of the world, not to a capitalist America. And the reason we all invest there, because it's a capitalist country, not a socialist country. If the agenda is socialist, you'll get socialist return. You look at Indian markets, the fact is, leave aside 5-10 stocks you might be lucky in, but equity markets in India have given a return of what? 2%, 5 years, 3% at best. Some are even negative for that matter. So, a socialist-oriented country will typically give poor equity return. I think that's a given, because government spends your money compared to the private sector. So I think, if you ask me, if Mr. Biden wins, its time is look at the stimulus package and offload your stock and wait out in the market.
Okay, in which case, what options stay for an Indian investor then, Ajay? We are seeing some bit of green shoots on the economic front, but you don't seem to be completely convinced about investing in India at these levels.
No, see, these levels, the market is fairly priced. Let's be honest. Anybody can be talking and saying, yes, it's fairly priced market. That's one issue. Second is, the Bihar election, we are ignoring it, but that is one important thing. If this incumbent loses, Nitish loses, that means a substantial reorientation to the social policies of the country, which is the bottom 40% is really hurting. Post demonetization, post GST, post this lockdown, it's really hurting. Now, if that hurt translates to votes and loss of seats, then you will see political action, economic action. If the incumbent wins, then it's business as usual. So I think the Bihar election have a major implication on reallocation of money by the government, and you'll see a slew of measures to come out if the government loses election in Bihar, which has implications on your fiscal deficit, other expenditure, and so on. So for us also, the implication of US is very clear on the border and the oil, but in Bihar, it will start to affect how the government spends the money for the next 12 to 24 months, because the couple of big state elections are on the anvil.
That's an important point. But let's assume that nothing untoward, or from a ruling party perspective, nothing untoward happens and it's status quo. My question, Ajay, then would be that, and then couple it up with if there is a possible democratic win, do you think India, which is now embarked upon a clear vision of encouraging domestic production, incentivizing local industries to probably invest some in select areas, but is doing that? The PLI schemes are examples. Will India be able to continue on that path, wherein there is not a status quo in the US, but a change in the US?
See, some, as always, some is good and bad. When you have PLI scheme, etc., then you're putting in, again, back to the same point, that you give the artificial oxygen for 4 or 5 years and hope that the company will then survive after that. So you will find a Dixon Technologies who will keep taking money off an assembly operation. But whether the key is the pharma one, the pharma incentive, whether that gets set into the country and so on. And in context of that is the issue with China. That's why I said China is important, because if they are left unbridled, they're going to flood the world markets with chemical products and pharmaceutical products at a lower price, and India will become uncompetitive. So yes, it's all good to say we'll have a domestic industry, but that domestic industry needs to be strongly competitive. Look at steel, what's happened in steel. You put the tariff barrier, steel at a historic high price, It's hurting the industry, the hurting the car industry, the two-wheelers, and everybody is hurting. And look at the margins when they come out. So you will pay, when then you have to really reconcile and say, I will be a domestic market. Export is not my forte. And I don't think history has shown us any country in the world has made great economic progress without exports. So the flip side to all these matters is the fact that are you encouraging inefficiency back in the system, or people who get the benefits, people who get the dollops, produce incompetently and inefficiently, still make money. Therefore, you don't let competing industries to come in. And I think that's a big danger. So, well, they will make money. Pharma guys will make money. PLI, let's be honest, in terms of listed space, apart from Dixon, I don't know any other major company which is you can invest in to benefit on the PLI basis. But pharma, yes, some of the companies will benefit. But I don't think it's a good long-term strategy, because if you want to be globally competitive, you got to have an open economy. No country has done this, tariff barriers, and been a globally competitive. I think it's an anathema. We have lost our exports. You saw the latest numbers. I don't think it looks well for our exports.
And imports might move up. And just one final question, Ajay, on this one, because it's a moving piece, and we'll probably get a chance, if you have the time, to talk again some point of time later on in the next few days to get your assessment. But one final thing, a lot of companies who are getting these benefits as well, whether it's Dixon in electronics or some of the other areas wherein there is some hope of a PLI kind of scheme coming in, are saying that the export possibilities are now starting to open up. You think they are too small, or do you think that it's too early to call that?
I think using the terminology of election, it's too early to call that, because export has a certain, has a thing of continuity, longer term supply sources. Now, if I know that my supplier has got a limited subsidy for 4 years or 5 years, then he's not a long term supplier, because end of the subsidy, get closer to the end of subsidy period, then what do you do? Because that guy's cost of production is going to go up. So if you look at a long term source, strategic sourcing, people look at long term and say, is he competitive as supplier? Temporarily for a trading, of course, you can export out of trading benefit, because for 3-4 years, you are getting a benefit from the government of India. But as I said, that's not a long-term way to build a strategic sources. People look at it competitiveness rather than temporary subsidies. And subsidy can stop. See, it's like this. It's a budget allocation. How much budget you allocate? How much money is there? Whether you get reimbursement finally. CAG audit will come and says, have you got the right money? When will the cash flow move from government to the company? So it's all good on paper, but in reality, when it comes and how much money will be allocated, if there are more companies competing than the budget allocation, then who gets the money first? So good ideas, but I think practical implementation of subsidy schemes to get exports to come up is not going to work. That's why you look at IT, look at pharma. They did a good job without that support mechanism. They did a very simple mechanism saying no taxes, which the IT company enjoyed for so many years, and then you are up and going and you're ready. But if you have production-linked incentives, I think you got a problem there, because you need to get reimbursement from the government.
That's true. Ajay, some very interesting points, particularly the point about offloading US equities as well, post-stimulus, if it's a democratic government at play. I think people would well do remember that. But thank you so much for speaking to us today. Stay safe and happy festivities.
Thank you. Same to you, sir. Thank you very much.
Thank you. And viewers, thanks for tuning in to this conversation.